Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, December 21st, 2023. I am Frank Ochoa, aka PivotBoss. A little bit of a bounce back here after Wednesday's late day sell-off. In the last 90 minutes of the session, price dropped tremendously here, back within range, dropping within range of these last 4 days up, dropping back down within that range. Very similar to some of the other times we've seen it where it's dropped within range here. And the expectation right now is this market remains quite bullish and we could easily turn right back up and fade back to the midpoint, especially with GDP on deck this morning, and we got it. So we got a quick fade already. A bit of an intraday key range that has been fulfilled now from an intraday perspective, which means that's the high, that's the low, and that's the range. With an upward bias, we could continue trading here and continue higher. So very boxy, very similar to what we've seen before. It would take quite a bit for bears to defend this midpoint and take it lower. We just haven't seen price actually break market structure and sell off. Not in this bull market at least. So the expectation is for price to remain within this box with an upward bias. A failure to hold 47.30 or so, that could open up a bit of selling pressure that takes you back to a gap fill down the way. Again, this market just hasn't demonstrated the ability to push down in that way lately. So right now, range bound with an upward bias still. If we take a look here at the NQ, a nice little bounce back as well. Previous session, sell-off outside day against 2-day range, still inside the range overall, bouncing back today, reaching the midpoint as expected, and now we have a little bit of a boxy range with an upward bias. This market continues to remain quite bullish, no pullbacks to speak of, at least not yet. We don't have many more trading days in the year left. We have a 4-day week next week, and we have 1 day left today after today's session. So really about 4, 5, 6 full trading days left, and those could be mostly sideways with an upward bias finishing on highs. That's the expectation here heading into the end of the year as of right now. Any failure here, of the FOMC key level especially, that would open up some weakness back down, and again a return to the gap fill of the rollover gaps. But as of right now, even a pullback that deep could keep prices in check with an upward bias until proven otherwise. Taking a look here at crude oil. This one is down 1.6% today. A little bit of a topping out type of pattern yesterday after demonstrating quite a bit of strength. This thing came in here, putting in a little bit of a tail and a squat bar, and today so far inverted checkmark day, down precisely off the previous session's midpoint, and that could open up a bit more weakness. Now this thing has been demonstrating some healthy strength here off these lows, but remains within a very bearish downtrending channel. On this pullback, can we get a higher low? Can price develop some sort of higher low that'll open up a continuation back towards 78 and 80 by the end of the year? So that's what we're looking for here. Can price find some sort of low here early today, maybe tomorrow, that could lead to a final push higher into 78s up ahead. As of right now, this market holding here just above 72s in a little bit of a range, pulling back with an upward bias at the moment. Taking a look here at gold. Now gold has been range bound, stuck in the range, big time strong high 2154, 2152. Big pullback with a strong reaction to the FOMC day, and then ever since then this thing has gone super flat, 6 days flat, testing the previous month's close price basically day over day. This thing appears stuck in the middle of the range and could continue to be stuck like this for quite some time. This is a huge impulsive move down with a snapback toward the middle. Didn't quite get the middle yet, but toward the middle, and when you have that size of a range, you tend to get stuck in the middle for a little while before you see that next move. So this one range bound as well. Lastly, looking at the YM, this one has been very, very bullish. And yesterday, again, surprising late day meltdown. Dropped in about the last 90 minutes of the session and went outside day against the previous 4-day range. That's how small the previous 4-day range is. Here's the low. Here's the high, outside day down against the previous 4-day range. but still selling pressure within range, which means, again, this market remains quite strong. This is weakness or weakness or weakness within range, not necessarily pulling back and breaking structure. So that's very bullish still overall. This market continues to flow higher, and until we've broken that trend or this structure, we continue to see sideways to up movement. At some point we will fail and some bigger impulse wave will happen. Until then, again, take what you can get on the downside. The counter trend moves are very, very fleeting, few and far between. At some point we will get a bigger move that can swoosh us back and fill in some of this thin portion of the profile. For right now, sideways to up until proven otherwise. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.